guys so much for tuning into another live stream. Today is January 23rd, 2025, and yeah, let's get right into the charts here. Give me a sec. I need to put some ointment on my chest. Alright, so today on the daily time frame here on NQ, I am anticipating here I wanted to see us take out previous day high here, and my daily objective would be for us to take out previous day high, which is going to be that green line I did note right there. But that would mean for us to, I wanted to see us respect this 4-hour Ferrari gap. However, we didn't do so, and right now it's not, the 4-hour time frame is not in alignment with the daily, right? 8-hour time frame here is not telling me that we're going to respect or we're in alignment with the daily time, daily objective. The daily objective being previous day high. However, with the way that we're looking here on the 4-hour and the 8-hour, it's not suggesting that we're seeking higher prices. So with that in mind, I mean, if we do end up reversing today, then I guess that would make sense, because there is SMT here between NQ and ES. So ES has already taken out December 26th high of day or 25th high of day, and NQ did not. Another thing that I'm watching out for too today is the daily immediate rebalance, right? Will today's low of day reach all the way down here to the daily immediate rebalance and not create a daily fair value gap? Or we can just consolidate today. Let me take a look at the economic calendar. So we have unemployment claims here at 8:30, which was about 6 minutes ago, and then we have President Donald Trump is speaking at 11 a.m. So that could bring in volatility into the markets. But yeah, as of right now, like I said before, the 8-hour time frame, 4-hour time frame isn't necessarily in confluence with the daily, so it's just a little, iffy. And yeah, I'll just wait and see how we close here on this 4-hour candle and this 8-hour candle for a morning objective. But as of right now, I can't rely on the daily time frame, because the intraday time frames aren't aligned with that, right? Even though the daily time frame is telling us that we're going to seek, or that we want to seek higher prices, the intraday time frames like the 4-hour, the 6-hour, the 8-hour, and the 10-hour isn't necessarily in confluence with that, right? And yeah, we just gotta practice patience. There's nothing wrong with not having anything to to trade with. But yeah, coming into this morning, I would rely on the 4-hour time frame for my morning objective. Depending on how we close will tell me if we're going to continue lower or not. But yeah, just based on this 4-hour candle right here and this 6-hour candle, I'm actually wanting to see lower prices here, believe it or not. Let me take a look at what ES is doing before I really put this on. So this is ES. So ES, So ES here, I guess, is relatively higher than NQ, trading a little bit higher than NQ. Okay, very, very interesting. So yeah, NQ or ES isn't necessarily suggesting lower prices, but let me see what ES is 6-hour candle looks like. Yeah, so ES is ES 6-hour candle this candle right here was suggesting that we're most likely to take out the 6-hour low, but we didn't end up doing that, and we just took out 6-hour high. So there's SMT here, there. This is interesting. Markets are not really in tandem with one another, which is something that I do not want to be a part of. So yeah, I think coming into this morning, I'm actually going to be a little bit more careful with the types of trades I'm going to take today, right? Just super weird, and I'm not too convinced that what's this high? 22.94. I'm not anticipating for 22.94 to be the high of day, to be exact here. Or not the high of day, but the high of the week. Or I mean, it could possibly be the high of the week, but I don't see us treating this high as any strong-term high, because it's not. The move down here, this move down, there's no displacement in this leg, right? There's no fair value gaps to help us trade lower. It's just kind of hesitant, but we'll see. If we can get displacement lower, then I'll be convinced that we might be seeking like lower liquidity. But as of right now, I'm not completely convinced that we're going to seek lower prices. Like this move right here with this fair value gap, that's something that I would like. Okay, that's for us. That's us seeking lower prices. But yeah, as of right now, I don't know. I don't want to call for higher prices because it's not necessary. There's no reason for us to call for higher prices, but I can't really call for like lower prices just because the lack of displacement. But we'll see. Let me take a look at the dollar. Very interesting. So the dollar, we actually continued lower here, and very interesting here. Dollar, I don't really have much, to be honest, not much bias here on the daily time frame. I wanted to see here, based on this daily candle, I can anticipate the daily candle's high to be taken, but afterwards, not much of a bias, to be honest. Yeah, it looks weird. It's kind of strange where we're at right now. 2 more time frame. Okay, 3 M. Oh. Okay. Very, very interesting as of right now. Yeah, let's just, like I said, I'm just gonna wait. There's no need for me to really force anything here. No need for me to force a bias. No need for me to force any trades here. Let's get right into, I do want to take a look at my pros and cons from last week, just so I can just reinforce the ideas and concepts that I should be enforcing in my trading. Alright, so based on last week's trading, I managed to continue to have a consistent strategy, right? Every single trade that I took last week, I was able to identify what my higher time frame objective was, I was able to explain and identify what my model was going to be, and every single trade there was an entry pattern. And my entry pattern of choice is a fair value gap. I don't enter off of anything else besides fair value gap, it's just a personal thing. I know that ICT has introduced, there's order blocks, there's breaker blocks, mitigation blocks. There's a bunch of blocks, or I guess just a lot of PD arrays that he has in his arsenal. But the one that sticks out to me most is a fair value gap. It's the easiest to see, to be honest, and it's completely objective, right? There is no subjectivity with a I guess fair value gap. With order blocks, it's a little bit different, because would you have seen this as this last up close candle when we started to change shift? Would this be viewed as a order block? Like, it's kind of, it's very, very subjective. But fair value gaps, like my fair value gap, if I were to show you guys this fair value gap here, it would have been the same on your or on your chart as well. And yeah, it's just super reliable. I don't know, it's just, you can't be subjective with a fair value gap. But yeah, going back to the pros and cons, like I said, every single trade that I took last week, it wasn't necessarily the same trade, but it was following the same strategy, right? Higher time frame objective, a model, and an entry pattern. That's something that I can control. I can control what type of trades I take, right? When I take it, when I can actually execute my strategy. Something that I'm not in control of is the outcome of the trade, right? That's all up to the markets, up to the algorithm. Whatever entity is controlling it that's completely out of my control. And fully accepting that, not even a concept, that's just that's common law, where you have to accept the things that you can't control, right? And just only be focused on what you can control. And for me, the only thing that I can control is how can I execute? How will I do things when one of my requirements aren't met? Am I going to still take the trade even though there's no entry pattern? Am I still going to take a trade even though I know the objective is so clear? The answer is no. If like, let's just say that I know what the higher time frame objective is, I have a model, but there's no entry pattern, there's no fair value gap on the lower time frames, there's no need for me to force it, right? I have a strategy in mind, and if I don't stay disciplined to it, then it's no longer a strategy. It's just that's the whole concept of this strategy, is for you to actually execute on it. And if you can't execute on it, then I don't know. Second thing here, implementing standard deviations. So this is based on, I believe it was the second trade last week, was it? No, it was the first trade. So standard deviation projections, right? The idea is, this is the trade that I based that idea on. So this 30-minute candle here, the way that we closed here on this 30, we closed below this candle's low. And notice how this first candle, second, and third created a 30-minute fair value gap. This 30-minute fair value gap is to be treated as a breakaway gap, because the third candle's the third candle's closing price is below the second candle's low. So this fair value gap shouldn't be revisited, right? I don't want to see prices trade up into here. So if I know that within the next 30 minutes, I can anticipate for this inefficiency inefficiency to be left as a breakaway gap, I can anticipate, that means I can anticipate the opposite. I can anticipate for this low to be taken. So that's my higher time frame objective, right? My lower time frame model. So 30-minute, I'm now going on to the 15-minute. So what's this 15-minute candle suggesting to me here? The way that we created this 15-minute candle, it's suggesting to me that we are most likely going to take out this 15-minute candle's low first, and then possibly expand lower to attack the 30-minute low. So the bare minimum for this model here is for us to take out the 15-minute low, and we should continue to expand lower to target the 30-minute low. And keep in mind, notice how the 15-minute low is completely different than the 30-minute low. So this is known as an expansion model. The higher time frame order flow for this trade is based on the 30-minute power of 3. I am anticipating for prices to expand towards the 30-minute low after completing the 15-minute model. And yeah, this right here, gonna treat this fair value gap as a breakaway gap. I don't want to see this gap be revisited just because of the fair value gap theory, right? Knowing when fair value gaps will be treated as a breakaway gap will tell you a lot of information. So now that I have my higher time frame objective in mind, I know what my model is going to be. I have to find an entry pattern, right? Is an entry pattern present? In this case, there was one. This 1 minute fair value gap here, I didn't highlight it for you guys, but there is a fair value gap between this candle's low and this candle's high. There is a SIBI, sell side imbalance, buy side inefficiency. And notice how this 15-minute low is here, and once we trade up into this 1 minute fair value gap, I take my entry. I'm targeting the model's objective, right, which was the 15-minute low, and then we should continue to expand lower, expansion model, towards the 30-minute low. So there's that, and I set up some standard deviations too, so which is why I'm even going over this trade. So from this swing high right here to this swing low, notice how that's from the retracement leg into the 1 minute fair value gap. So this retracement here allows me to actually set up some standard deviations, right? One key thing about standard deviation, one of the properties that make it very high probability, is that if the standard deviation projections align with existing liquidity, that just makes the whole, I guess, it makes the projections more probable, right? More probable to be hit. So the -1 standard deviation of that swing leg, it aligns exactly with the 30-minute low, which means that the 30-minute low is more probable to be taken, if that makes sense. And so let's go back to let's go a little bit more into time here. So after we complete the 30-minute low and the 15-minute low, we continue to expand lower, and then notice here, this is where we retraced. -2 to -2.5 standard deviation, right? We kind of stall here for a little bit. I can almost guarantee you that we retraced into some sort of fair value gap, like somewhere here, and then we continue to expand lower. Once more, retrace, and then we hit the -4 standard deviation. Typically, this is where prices wants to reverse, right? Is once we take out this -4 standard deviation, we begin to reverse, and this actually ends up being the low of the day. But yeah, this is an A+ setup, right? Like I said, I'm able to identify you guys what the higher time frame objective is. I'm able to identify what my model is, and I'm able to showcase what my entry pattern is. But yeah, that trade specifically, standard deviation was a pretty big core component of that trade. And third thing here, from last week, stay patient. There was no need for me to force anything onto the charts if a trade wasn't present, right? If I had gone throughout the week without taking a trade last week, completely fine. Like I said, I'm not in control of whether or not whether or not prices moves up or moves down. The only thing that I can control is how I execute on the opportunities that are presented. And yeah, no need to force anything. Allow the trade to come to you. And yeah. So it is 9:55, or I guess 9:55 Eastern time. So some of the things that I guess one of the things I need to work on this week is actually being present here in front of the charts by 9:50 Eastern time. So here I'm taking a look at the charts right now. Man, I really, it's gonna be hard to explain, but this 8-hour fair value gap that we're creating here, notice how we're creating it. This 8-hour candle's low, or I guess closing price, where are we in terms of the second fair value gap's candle's low? I'll make that a blue line. So right now it appears that we're going to close below this blue line, meaning that I'll treat this 8-hour fair value gap as a breakaway gap unless prices does so. And unless prices just completely reverses into this inefficiency and rebalances it. But as of right now, if we were to close right now in the 8-hour time frame, it would appear to me that we're going to have to treat this 8-hour fair value gap within the next 8 hours to be a breakaway gap. I don't want to see prices revisit this inefficiency. However, let's take a look at how we're creating this 4-hour fair value gap. This 4-hour inefficiency here is suggesting to me that we could rebalance this inefficiency. Why? This is the second fair value gap's candle's low. This is the third candle's fair value gap's high, or not high but closing price. So is the closing price here above the blue line? If we were to close right now, yes, it would be. So this means that this fair value gap could be treated as a gap that gets rebalanced. So kind of weird, but that's how you piece the time frames together, right? So 8-hour fair value gap to be treated as a breakaway gap, 4-hour fair value gap treated as a gap that could be possibly be rebalanced. So very, very interesting so far. On the 15-minute time frame, a whole lot of consolidation. Just look at the range that we're in. This is something that you don't want to be a part of. This is terrible. Like the way that we created this, this back and forth here. Not. It's not that fun. This isn't something that you want to be a part of. But yeah. I don't know. I don't necessarily have a bias here coming into this morning, to be honest. I mean, we still have 2 minutes left, so I mean, anything could happen. But as of right now, nothing for me. Nothing for me to really call for. So let's see, we have about a minute left. Very, very interesting. We have Asia's high still intact, and then London highs still intact. On ES, same. Oh, actually, we've taken out London highs and Asia's highs. So there's SMT here. But look at this move up, though. This move up on the 15-minute time frame, look how choppy it is. That is terrible. So if you were in any situation, like if you were in a long here, the amount of chop and the amount of time, yeah, this looks terrible. I don't know what's, yeah, that's terrible. I wouldn't want to be a part of that, and yeah, that just seems super terrible. So about 30 seconds left here for the creation of a new 4-hour or a new 4-hour candle, and then we're also going to create a 4-hour fair value gap with that. So like I said, here's the 4-hour time frame. Notice how we're creating that fair value gap. You're going to have to treat this fair value gap as a gap that gets rebalanced. So this morning objective here, we could end up rebalancing this inefficiency, but what is the 15-minute time frame telling me? That we're not in alignment with that objective, right? Even though the 4-hour time frame is telling me that we're most likely going to rebalance the inefficiency, the 15-minute time frame and the 30 isn't really in favorable of that, right? The time frames aren't in alignment. So if that happens, you just sit on your hands. No need for you to force anything here. And because I know that there's no objective for me to take, there's no trades, I'm just going to go back to the pros and cons here. So coming into this week, what can I work on? When analyzing a trade, I shouldn't be frantically, like, scattering through time frames and just trying to find, there's a fair value gap, excuse me. But when situations come like that, even if there's a trade present and I'm frantic, I don't have much time to analyze things, I shouldn't even take the trade. Because last week, if you guys were on the live streams, you guys would have noticed where I was doing my pros and cons. 10 a.m. comes, and then once I switch over to the charts, and I'm like, oh shoot, I see a model, I see a higher time frame objective, I see a model, I see a fair value gap, but I'm frantically trying to piece everything together. It just feels rushed and forced. So coming into this week, I'm actually going to start heading over to the charts and be actively looking at the charts at 9:50, or I'm not at 9:50. I'll guess 9:50 Eastern time, but yeah. Second thing, maintaining complete focus. So whenever I'm doing these live streams and just like trading in general, I want to be completely focused on the craft at hand, on the task at hand, and devote all my energy to the craft, right? There's no need for me to be paying attention to anything else besides this. And this concept applies to everything, right? It applies to everything in life, whether that be you going to the gym, whether that you be studying, whether that you be at work. Give it your complete all. Be solely focused on the task at hand, because as the more time you spend doing a specific task, you get into this flow state. You start building momentum, and you're rolling, right? And that momentum is going to just continue to add up and pile up. But if you get distracted, if for me, the best example is like going to the gym. You're working hard, you're focused on your sets, and your reps feel good, but you go onto the phone. You're done with your set and you just go into your phone. That completely messes up with the whole system that you just had in play, right? Your momentum is lost, and you're gonna have to reset. It's just every time you get distracted, you have to hit a reset button. It's completely fine for you to as long as, it's not bad that you get distracted, but don't let the distractions be a habit. Don't let it come back and forth. You gotta learn to not allow that to happen over and over and over again, right? But yeah, just understand, give it, whenever you're doing anything, be completely focused. And that's just something I have to also work on. I'm working on as well. Yeah. Third thing here is to continue to align my thoughts and my actions with my goals and values. Throughout the day, there will be times where I'm just, kind of like, I wouldn't say tired, but I'm eating or it's just, there are certain things that I do that aren't necessarily in alignment with what I am going afterwards or working towards. Like one good example is like I'm on YouTube and then it's fine to be on YouTube and watch like videos that I guess that like for me I like watching educational videos, but there are times where I'm just scrolling and I'm trying to find a video and then I see a Clash Royale ad or a Clash Royale like little short reel and I just click on it and then bam, I'm just sunk into that endless cycle again. And how is that going to benefit me in either way or in any way in the future? It's not going to benefit me. I'm not trying to become a Clash Royale professional player or anything like that. So why am I watching those videos, right? There's only a limited amount of energy that you have, and for you to devote your energy to something that's not in alignment with your goals and values, it's just a waste of energy is what I'm trying to say here. So yeah, for me, best thing here is how I'm actually going to implement this concept, right? Is on iPhones, there's a way for you to limit your screen time. And screen time is something that's also been a pretty big factor on how I get distracted sometimes. Just the phone in general. So I've been limiting my time on the phone by a significant amount. I allow 15 minutes on Twitter every single day. I allow 15 minutes on Clash Royale, and I allow 15 minutes to read manga. But after that 15 minutes up, apps closed, blocked off. I can no longer go onto it, and it just makes that's creating a more positive, an environment that's in support of my goals, right, and values. So that's a way that I'm implementing this whole concept as well. And also creating a little vision board, having just physical reminders to yourself that hey, it just reminds you what you're kind of working towards. You have a direction in mind. Your actions have a purpose behind them. So having I guess a vision board is extremely crucial. Would be extremely crucial to your overall vision, right? How you're going to work towards into the future. It gives you a little bit, I won't say dopamine, but just kind of allows you to take a step back and really see what you're working towards. And now let's go into the improvements here. So coming into this week, I should be able to explain to you guys what my higher time frame objectives are. I should be able to explain to you guys this is my model and this is how I'm going to align this specific time frame with the higher time frames order flow. And once I'm able to define my model, I have to be able to, there has to be a fair value gap present on the lower time frames that's in support of my model. And if there isn't, then I'm not going to take the trade at all. Having a consistent model and the way and executions is more important than the outcome of the trade. The outcome of the trade is simply just a short-term, I guess, a short-term little bonus. But if you want to be successful for a long time, you have to find consistency in the things that you in the models that you take, right? And that's the only way to do it is to actually just to do it and be consistent. Second thing here, actively watch the markets here at 9:50 Eastern time, and I was a little bit late. I think I began watching it at 9:54, but nevertheless, I was present. The third aspect here coming to this week is maintain that that focus, right, on the task at hand. If I'm at school and I'm in class, put that phone in the backpack. Make it harder for me to be distracted, right? And yeah, just don't allow yourself to be distracted. Momentum is real. It's an actual, like, it's actually there. It's not you can't visibly see the momentum, but it's there. And aggressive trading. So that's gonna be all for the pros and cons for this week. There is one more thing that I do want to go over here with you guys, and that is I want to go over the EQ model and the rebalance model. So some of the trades that I took, like, I guess this was on the 20th, so this was on Monday. This is a equilibrium model, so I want to implement this trade here into my equilibrium I guess slides. So EQ model, which is short for equilibrium. So here I'm gonna do, I want to put this trade into this Google Slides, just because that's going to just allow me to review the trades that I take. So like all of these trades here in this specific slide here, they all have the same, they're not all the same, but they have the same theories and concepts behind them, right? So like in this specific trade here, notice how there's a dealing range. From this swing low to this swing high, there's a dealing range. And within a dealing range, there's an equilibrium level. So there's a level that separates premium and discount. And so I take this model based on this 4-hour candle here. So this 4-hour candle, I'm anticipating for this 4-hour candle's low to be taken. And after we take out this 4-hour candle's low, we're actually rebalancing a inefficiency and trading back into discount. And the whole reason of discount is that prices likes to trade into discount, or vice versa. Prices likes to be in premium if we haven't traded, so we haven't even traded into discount yet of this dealing range. And if you're a buyer, you would want to get prices into discount, right? So there's a reason for prices to continue lower here. So in this specific model, or in this specific trade, I want to see us continue lower, because if you are a buyer, you want to buy in discount. So that's my higher time frame objective. There's another objective as well, being to rebalance this inefficiency. On the 15-minute time frame, that's where I find my model, right? So notice here, the 4-hour candle's low is the same low as this hourly low here. So that means that we should complete this 4-hour objective within the next hour. And if I go into the 15-minute time frame, this 30-minute low is actually the same low as the hourly low. So that means within the next 30 minutes, we should complete the hourly objective and the 4-hour objective. So now that I know there's a time frame that I have in mind that we should complete this objective, there is a 15-minute model as well, right? So this 15-minute candle here is suggesting to me that we're most likely going to attack that 15-minute candle's low. So that's my model, right? We should take out this 15-minute low, and we should expand lower towards the 30-minute low / 4-hour low, and we should continue to expand lower once more to retrace into the discount and rebalance that 4-hour inefficiency here. So based on this 15-minute model, I'm going to now go on to the lower time frames relative to the 15-minute to find some sort of entry pattern, right? And my entry pattern here is based on this 1-minute inefficiency. So whenever prices trades up into this inefficiency here, I take my entry. I'm targeting the 15-minute low. And why else should we be continue to expand lower? To target the 30-minute low. And once we do that, my objectives are now hit, and then I just, if I were to use the standard deviations here, I would just let the standard deviations, attack, my the -1, -2 to -2.5, and etc. But yeah, what I'm trying to explain is that these concepts are happening on every single time frame, on every single day. So if I were to, let's take a look on this trade here. The same concepts are being applied, right? Based on this chart here, swing low to swing high. What do we have? A dealing range. And within that dealing range, there's the equilibrium level separating discount and premium. So in this specific model here, the hourly, the 30-minute, and the 50-minute, all of those time frames are suggesting lower prices. And keep in mind that the 50-minute low, the 30-minute low, and the hourly low is the exact same low. So that means that we should complete the hourly objective within the next 15-minute time. Within the next 15-minute, that whole concept is called the scoping, and it just allows you to understand when prices will complete a certain objective, right? And here, the idea for this trade is, or I guess the higher time frame objective is, we should continue lower after taking out this hourly low to retrace into discount, right? I want to see us retrace into discount, and so that buyers could possibly buy in discount. So that's the whole theory behind this trade. And it's the same theory as the first initial trade that I went over with you guys on this one. So here I have my higher time frame objective, which is to retrace into the discount level, right? I have my model. In my model here, instead of using the hourly time frame, I'm using the 15-minute time frame because of the idea of scope. So 15-minute time frame, there is a 2-minute fair value gap, which is going to be my entry pattern. I take my trade here, or I enter the trade here, and let's see what happens. There's the inefficiency. We retrace into that 2-minute fair value gap, and we end up taking out the 15-minute low / 30-minute low / hourly low. So notice how all of those lows are the same, and we actually expand towards the equilibrium level too. And if I were to go over the trade from Monday this week, same concept. Swing high, swing low. What do we have? A dealing range. Within that dealing range, like I said before, there's that equilibrium level separating premium, and discount. So in this case, for sellers, they want to be sellers in premium. So just think about it. In real life, right? If you were trying to sell shoes, or let's just say you're trying to sell shoes, and you're offered, all right, man, I'll buy your shoes for $80. And another guy comes up to you, and the guy goes, hey, I'll buy your shoes for $100. Are you willing to sell to the guy that offered you 80 or 100? 100, right? That's to maximize your gains. That's the same concept here, is that sellers, they want to be selling in premium. And so the whole concept is this is kind of reverse psychology in this. So instead of you wanting to sell in premium, you actually want to target premium because you understand the concepts behind a market, right? This is a market, but this is just digital. I want to say digital, but it's online. But yeah, it's the same concept. If you're a seller, they would want to sell in here, so why not target the area that they want to be selling in? So the trade the higher time frame objective is for us to retrace into the premium. And my model here is actually based off of this 15-minute candle. And this 15-minute candle, it's a bullish candle, and it's suggesting to me that we're most likely going to take out that 15-minute candle's high. And one thing that I do want to go over is that the 15-minute candle's high is actually exactly at the equilibrium level, which is kind of, it's not coincidence. That's perfect. That's algorithmic. And so I have my higher time frame objective, that's being to retrace into premium. I have my model, that's being the 15-minute power of 3. My entry pattern is this 1 minute fair value gap. Notice how we are like consolidating here, and we wait until 11:15. 11:15 we opened up and we complete the objective, right? All of this, I guess ICT calls it time distortion, is, for me, I understand it is when a certain time, when it's time for prices to do a certain thing, right? And this 15-minute candle is telling me that right now. And so this 15-minute candle, I guess the next 15-minute candle, we open up at 11:15. I buy at the inefficiency, and notice how I'm buying below the 11:15 opening price. It's just another concept that I'll go over like right after this. But yeah, I take my entry at the 1 minute fair value gap. I'm targeting the 15-minute high, and then I'm targeting, like I said, the 15-minute high ends up also being the equilibrium level, so it just kind of makes it more ideal. But yeah, that's the trade there. But what I'm trying to get at is these trades are occurring on every single time frame, at every single day, right? This is only one aspect of higher time frame objectives. This is just one of the theories. There's more. There's rebalance inefficiencies, and there's to take liquidity. This is just to retrace into equilibrium, right? And it's just a highly it happens a lot, and if you're able to understand these concepts, you'll be presented with a lot of opportunities. But it's not to guarantee you. I'm not trying to sell to you guys that every single trade that you take is going to be guaranteed. But because there's a lot of opportunities, you got to make sure that your rule sets that you've set for yourself is concrete and you follow them. Like for me, these higher time frame objectives occur all the time. But if there's no model, if there's no entry pattern for me, I'm not going to take the trade, even though I know what the objective is going to be. Like coming into today, like I said, I told you guys that my objective was for us to rebalance this 4-hour inefficiency, right? So why haven't I taken a trade yet? Because there's no model, there's no entry pattern for me to take the trade off of. That's me being disciplined. And I'll go over the rebalance model, and I guess I'll go over that tomorrow. But I do want to get into, I guess, the psychological aspect of the live stream, which is going to be the daily Stoic quote. If you guys have been on here with me for a while now, so let's see, daily Stoicism quote. But yeah, hopefully you guys learned a thing or two from what I just explained. But yeah, if you guys, aren't necessarily too sure what I'm talking about, or if you guys aren't sure, or like completely confident in what I'm trying to explain, I have a Discord. You can always join it. It's available on, I believe it's in my YouTube description or bio, so you guys can check that out there. But the daily quote for today is: the happiness of your life depends upon the quality of your thoughts. This quote, it kind of relates to this whole concept of aligning your thoughts and your actions with your goals and values. You find meaning, you find purpose whenever you're in alignment with your values and goals, right? If you don't have any goals, if you don't have any values, you're basically you're a void. You have nothing that makes you, I guess, happy, right? And if you have thoughts that are in alignment with your goals and values, that's when you're going to find true happiness, or I guess fulfillment. But let's break this down according to ChatGPT. The power of thoughts. Your inner dialogue shapes your perception on life. Positive, rational, and constructive thoughts lead to a fulfilling and peaceful existence. And keep in mind, power of manifestation, power of just thoughts in general is real. And this whole idea comes from conscious mind, subconscious mind. The conscious mind is the mind that you're like what you're thinking of right now, right? How you're able to follow along with the way I'm speaking, and just your active thoughts, right? Those active thoughts are going to seep, or like, I guess they're going to sink into your subconscious mind, and it's going to allow your subconscious mind to know what you truly want. Even though your subconscious mind isn't something that you're like actively, because it's almost contradicting that you can't consciously tell what your subconscious mind to do, right? But you can influence it by thinking of good thoughts and constantly feeding yourself with thoughts that, that's motivational, that's positive. Every single day there's affirmations that I tell myself, and that you should tell yourself as well. I will be this, I will be that, I have the ability to do this. All of those thoughts and those phrases that you speak into the world, they're going to manifest through your subconscious mind. Your subconscious mind allows you to see things. It might not be like, you're not going to, I guess, feel it happening and see it happening, but your subconscious mind is working when you're sleeping. It just, so think good positive thoughts. Think of thoughts that are supportive of your goals, and just let go of all the negative energy and negative thoughts that do come to mind, right? And not to say that there will be not ever a time where you're not going to feel negative thoughts, but and whenever that happens, I like to journal and just kind of reflect, like, why am I feeling this way? And it kind of just breaks it down objectively wise on why I'm feeling that way. And once I find out the core reason, I can just, boot it, just kick it. Second, guard your mind. Just as you wouldn't let harmful things enter your body, don't let negativity, self-doubt, and toxic ideas to dominate your mind. A disciplined mind is key to contentment. Perspective is everything. External events have no power over your emotions unless you allow them to. By focusing on what you can control, your thoughts, you take control, or you take charge of your happiness. So, and this idea is I feel like it's a concept that's actually taught in a lot of these, in a lot of philosophies, in Taoism, and a lot of these, teachings. The idea that you don't have control over, like, external events, like, let's just say that somebody cuts you off when you're driving, right? You have the power you have the control to whether either let that affect you or not, negative or positive, right? And I know for sure if someone cut me off, I wouldn't mind. I don't actually care. Like, that's up to them. It's your thoughts that give it strength, right? If you don't even think at all that whatever that person just did affected you, if you don't even like accept, or I guess not accept it, but if you don't even perceive it as negative, then it's not going to be negative. And just maintain positive thoughts. Just, there's no need for you to perceive anything as bad. Instead of, it's like seeing the glass, either are you seeing glass half empty or half full? Perspective is everything. What thoughts have you been feeding your mind lately? How can you ensure they align with the life you want to lead? So, like I said, vision board is crucial. It's just like, those little physical reminders of, hey, like, you know, this is where you want to be, right? So continue to think thoughts that align with that. And that's, I think that's gonna be all for today. Thank you guys so much for tuning in. I'm gonna post this inside the Discord. So like I said, if you guys want to join it, it's the Discord is in my link below. And yeah, thank you guys so much for watching it. And until next time, be safe.